So, top three things to get your portfolio in order before the end of the year. What are they? Number one, tax loss selling. A lot of individual investors look to take some losses to offset some of the gains that they've had throughout the year. Calendar deadlines. What do I mean by calendar deadlines? Well, these are deadlines on certain contributions that you are able to make, and they go by the calendar, unlike RSP contributions, which actually give you an extra couple of months in the new year that you're able to contribute your RSP before March 1st, right? You have January and February, you can make a contribution, and that will go against the previous year's income tax. So you can make a contribution in January and February of 2024, and that contribution would go against 2023 income. Rebalance your portfolio. The third point. I think it's a great time to rebalance your portfolio. If there was any year that your portfolio might be a little out of whack at the end of the year, it's going to be this year with such a heavy concentration into the tech space and the tech sector. A lot of individual investors probably have a larger weighting in that sector, and you may want to rebalance into other areas. And we mentioned that earlier about trimming profits. So let's talk about tax loss selling. We have a nice little graph here about tax loss selling. A great picture, gain versus loss. I like that. And we tax loss harvesting. And the definition, the automated selling of securities in a portfolio to deliberately incur losses to offset any capital gains or taxable income. That is the definition of tax loss selling. Basically what I've been doing for individual investors over the last few weeks, and I'll probably be doing this for the next couple of weeks, taking a look at their individual portfolios. If they have capital gains in their portfolios and they're going to realize and have to pay tax on those gains, well, maybe I can find some names in the portfolio that haven't gone up yet. Maybe they've pulled back and sell those names. Maybe we buy them back in 30 days. Now we have to wait 30 days or else the tax losses cannot be included in your tax return to offset a capital gain. But if we wait 30 days, we can buy back those names again. So you got to be strategic a little bit there. You want to buy things that you feel won't run higher in the next 30 days and that are sold today at a loss to offset some of those gains. So tax loss selling is definitely something you should consider and talk to your investment advisor about that. If you're watching today and you want to give me a call and discuss that with me, I'd be more than happy to do that. Yeah, there you go. There's the definition of tax loss selling. The second point I wanted to make is the calendar deadlines. And as I said, there are a few things that have calendar year deadlines versus the RSP, which has a deadline of March 1st. The first one is RESPs. Have all of you watching today topped up your RESPs before the end of the year? That is the deadline for it. If you don't, you can carry forward the contribution to next year, but you're only able to catch up 1 year at a time. So I found that a lot of investors, had they not invested in their RESP for several years, some of them may never be able to catch up because we know that by the time your child turns 17, they're not able to get grant money from the government. So keep an eye on your RESP contributions. The next, deadline or the next thing that has a end of year deadline are tax-free savings accounts. And we have a little illustration on tax-free savings account contribution limits. We can show that as well. You can see 2022, the limit was $6,000. 2023 was $6,500. And 2024, it will be $7,000. So you can see it is moving higher. I guess government is allowing these numbers to move higher to keep up with inflation. And so are you up to date on your tax-free savings account contributions? If not, the good news is you could carry these forward indefinite going forward. But I think for most people, they want to get that contribution in, get that money invested so they can start earning tax-free growth. So looking at calendar deadlines, I think that is important to do before we get to the end of the year. And lastly, but not least, rebalancing your portfolio. I think rebalancing a portfolio makes a lot of sense at this time of year. You want to head into the new year in the right space, right frame of mind. You want to head into the new year with the right balance in all the different sectors in your portfolio. right balance of the asset classes. Do you want to own some bonds? Do you want to only own stocks, mutual funds? How much do you want to own? Do you want to be the classic 60-40 portfolio, or are you 100% invested in equities because you're looking for growth? So portfolio rebalancing. Perhaps you want to trim some of your winners, as I mentioned earlier. Perhaps you want to buy into some of the names that haven't moved higher, be a contrarian. Or maybe you want to scale back some of the risk in 2024 because your investment objectives are dictating that you need to do that. So rebalancing your portfolio at the end of a year makes a lot of sense, along with looking at those calendar year deadlines, and along with looking at the possibility of selling some of your tax or your stock losses or mutual fund losses, or even your bond losses on a bond to offset some of those gains. Those are the ideas that I bring to you today that you should consider before the end of the year.